Okay, recording this video after the close of trade Thursday, 20th of May 2010, and what a day, what a night and a day. 40-point decline in the Emini on Thursday, and I hope you're able to kind of get on board with some of that at least. This was what I was warning about when I was looking at my charts yesterday, 81-minute E-mini chart here with my cyclical indicator, about a sine wave. And when we have the market hanging around below a critical support, a cyclical support level like this, for a few bars, there's always a risk that that's going to turn into another downtrend, and we kind of have another move down. I mean, where you want to see that kind of congestion is above support levels and below resistance levels. So you can see here it's above support, it's below resistance, above support here, and so on. But when we have a pattern like this, where the market kind of drops through and hangs around underneath support, there we go, that's what happens, kind of trend move down. The other thing that was concerning me yesterday was the lack of exhaustion selling volume. I was talking about since the last, when the market kind of peaked up to here at 1170, we'd had exhaustion buying, then a whole series of bearish divergence patterns, so less and less buying activity as we're making new highs, and then the market eventually tops out and then goes down. But before today's trade, this is Thursday's trade, we hadn't seen exhaustion selling on the downside in order to see a reversal of that. We'd seen plenty of kind of bullish divergence patterns here with less and less selling activity. But for a change in trend, you really need to see this kind of exhaustion selling and exhaustion buying in order to flush out all of those traders, usually amateurs, at the end of a move. And what we had today was a double. We had two exhaustion selling signals into today's low. So we were hanging around on this chart, again hanging around under critical cyclical support here, this end of trend level signal yesterday at 11:20. We were just staying there. Finally we broke through early in the overnight session. In the European session, we formed a pullback and a downtrend move, and the move continued on to an end of trend move. And then coming into the close on Thursday, you can see we had a couple of large professional blue bars down, signaling that those were professionals taking profits and reversing and maybe going long. And we had those exhaustion selling signals here. So now what I'm going to be looking for is divergence, bullish divergence patterns to follow up these exhaustion selling volume signals to show that this decline is slowing and will eventually kind of reverse into an uptrend. On this chart, you can see here's today's activity, the drop-off in the European session when we broke below cyclical support. The beginning of the open, we just had these large ranges with kind of downside momentum. And there's the first exhaustion selling, second and third on this time frame, and going into the final selling exhaustion signal here, whole range. I mean, I don't even know how many professional bars there are there as the new lows are being made. So you can see here as we're coming into these lows, we've got professional bars. We have a little bit of a ramp. More professional buying at these lows here than the professionals selling at these highs, and then coming into these lows at the end of the day, professionals buying into that down move. So I'm going to expect to see some kind of bounce. In the overnight session, we had the amateurs kind of pushing through to new lows here, trying to match that flash crash low, and we've kind of bounced from there. But I think this is quite significant with all of that professional activity coming into the lows here, buying those new lows. So I'm expecting a little bit of a bounce, but when we look at this E-mini chart, we've still got to make a pullback and a downtrend and an end of trend warning signal on these lower kind of time frames, like the 81-minute time frame. So, we're definitely in a strong down move. So let's see how this plays out. Just want to quickly, because I have personal interest in the Aussie dollar, just want to point out the absolute slaughtering that's happening in the Aussie dollar at the moment. I actually got out of the Aussie back in December, moved everything to USD, and you can look back at the posts. I did that over the course of 3 different trades, just moving my base trading capital. I tend to move it on a probably every 6 or 12 months, move it into what I think is likely to be an appreciating currency. So I've moved it out of the Aussie in December and into the dollar. And I thought I was always surprised over the intervening kind of 4 or 5 months how strong the Aussie has actually been, and actually having been back in Sydney for a couple of months, just how many good news stories there are around. You know, we've been very fortunate with the commodity boom and the prices kind of keeping. The volumes have been strong, the price have been relatively good, but you know that's been a large contributor to the growth happening in Australia. And then we've had a resurgent property market kind of making new highs in certain markets during the first quarter of the year. And now I think all of a sudden the sentiment started to change, although I must admit when you meet kind of day-to-day Australians and talk about the prospects for the economy and the property market, they don't seem to see that there might kind of be some weaknesses or headwinds ahead. But the currency market is just definitely signaling that there's a lack of confidence in the Australian economy, and things are starting to switch around. This is my daily mini chart here, and this is where I started to kind of lose interest in the Aussie dollar, and this was replicated in the US dollar index DXY contract. So we kind of peaked out with an end of trend warning signal here back in November, and you can see the rise into this end of trend warning signal up here, all these amateur bars here kind of hitting these new highs. Then a lot of volatility up at this 94 level versus the US dollar, and then we made a second end of trend warning signal again back up here at about 93, and this actually coincided when we look at the other time frames. So we go one time frame up to the weekly time frame, and there we go, an end of trend warning signal up at 93, showing the end of this uptrend move that we had when we broke above 73 or so the previous year, which then coincided with a cyclical turn on the monthly time frame. So I've made this point before, when you start to see end of trend warning signals lining up on the lower time frames with cyclical turns on the higher time frames, that does tend to suggest that we're going to get a change in trend. In some respects, I was surprised that the Aussie dollar stayed so strong for so long, and then on the other hand, I'm almost shocked at how quickly the Aussie has fallen over the last 2 weeks, from 93 down to I think we hit 81 overnight. So it's been a huge move down, and you can see the exhaustion selling volume is just absolutely massive on this downside. One of the things I think that is actually going to happen from that is that we're going to get a little bit of a bounce from this, but we're definitely in a downtrend. This cyclical support level was broken at 91.5 or so. We're definitely in a downtrend here, and I just think these things are not going to play out until we see, I beg your pardon, let me show you on the monthly, until the monthly chart, the cyclical turn on the monthly chart starts to bottom out. We get a cyclical turn happening on the monthly chart. There we go, something a little bit different, the Aussie charts, and I hope you were able to get on top of some of that down move on Thursday's trade in the E-mini.